Good morning, welcome to a morning outlook. This is Kim speaking on Wednesday, the 16th of February. I almost said March then. Just wishing the time away, eh? Anyway, let's have a look at these markets this morning. Firstly, let's look at the potential risk events. Well, we've just been through inflation, UK inflation data. I say just an hour, 45 minutes ago. Inflation came out at for the UK at 5.5 versus 5.4 expected. So just a little chip up there, then more that's running slightly higher. But in basic terms, all the data that came out was near enough positive there, which just puts more pressure on interest rate increases. Aside of that, then this morning, 8:45, we got the Deputy Governor testifying. We could see some volatility, particularly if you're trading around the Aussie Dollar at that sort of time, 8:45. Thereafter, really interesting things of, well, most volatility, should I say. Did I say interesting? And economic data at the same time. Didn't mean that. Anyway, Canadian CPI at 130. US retail sales at 130. So retail sales, I expect less volatility. We might get more movement from the Canadian CPI, but if you're trading the Canadian dollar, US dollar or US Canadian, you'll see some volatility certainly in that pair. Right. Aside of that, later this evening we've got the FOMC meeting minutes. Now we have seen the things in there before that surprised the market, so just be aware that it's there. I wouldn't be sitting there trying to trade anything from it. It will be out so quickly, and the reaction would be relatively quick. So there you go, that's where we are there. Let's have a look at the market, starting off looking at the euro dollar and the euro then daily wise. Yesterday ended up a more positive day. A geopolitical situation there with Russia and the Ukraine continues. Apparently yesterday the Russians claimed that they were withdrawing some of their troops and they'd finished training, but the rest of the world seems to be looking on thinking, well, there doesn't seem to be much in the way of movement. They've probably forgotten this satellite, but never mind. Anyway, the risks are still there. But the longer it goes on now, I think the more likely they'll get some sort of resolution. It's a case of who can exit with losing less face, probably. But that's a position that's still being still there. So affecting the markets, well, we might see a bit more of this continuation on the bullish side. On the euro, we'll see, but it's difficult to say. You just get choppiness, anything that's sort of bit risky. We see the currency sold off quite quickly, and then all of a sudden we'll see a bit of a bounce. Certainly got a bit of a bounce from yesterday, the low, back into the weekly pivot there. Sorry, monthly pivot even. Currently heading up towards the weekly pivot as I speak, although the 34 could just stop that. Morning extinct. We've got the higher lows coming through here on this hourly time frame, erring towards the sort of bullish side, but I wouldn't be surprised if we don't get more of it. I said it yesterday actually, because more consolidation in phases. We get this sort of move up in the first hour, and then consolidation. Bit of a whipsaw going on through here, quick sell-off and a bit of nervousness, and then a quick rebuy. Anyway, that's the way the markets are going to be, so I would tread carefully. The pound just sums it all up, just how choppy it is. It's maybe if there is some genuinely good news, we could see some genuinely good moves and a bit of risk going back into the markets. The pound and the euro both gaining, but at this stage it's two sides to this, and we could just end up with a continuation of this chop that we seem to be running in. Quite quick sell-offs, and then, as I say, quick retracements. Okay, and vice versa. Dollar yen. Well, same old story really, as I'm running through most of these. Chop, a bit of acceleration. Higher lows coming through on the dollar yen here. It's just so susceptible to key risk events. Aussie dollar just pushing up there. Sorry, just got disturbed. Higher lows coming through here. As I said, we've got news at 8:40 or speakers at 8:45. That could create some volatility there. Trying its best to, like most of these currencies, we've seen just a bit of risk coming back onto the markets, and we're just seeing the consequences of such. The bigger picture on the Aussie may be that it gets back towards its weekly pivot. Anything that sort of comes out of these two speakers here could create a bit more buzz about this. But for now, awkward markets, just running all through them all. And it's just a matter of patience whilst we see whatever happens happen, and then maybe we'll get back to normal, whatever that is. Anyway, another consolidation, slight sell-off there on the US Dollar Cad. All pretty much the same. A bit, as I say, looks like a bit of risk coming on now. Looking at other markets, commodities. Okay, so on that sort of the rumours and the comments, gold came off yesterday. It was almost a relief, of sort of movement back into the markets, profits taken, probably a bit over given back, but sliding back up towards its daily pivot, a break of the lows here, might see a continuation to the sell side, subject to news. So it's just all very iffy. Oil's starting to pick up a bit here. No trade for me yesterday on the oil price. It just carried on. There wasn't any signs of rallies. It has dropped back a little bit, but again, we could see. I mean, at the moment, I'm looking at this thinking, well, maybe there'll be a downward opportunity on oil later on, but we'll see what happens. But at this stage, I'm quite wary of the selling oil. I'd rather be buying it mostly. Anyway, there we go. That's oil. Looking elsewhere, he says. Let's have a look at crypto markets. So important sort of area still being chased there. It's turning. It looks like it's turning around. It becomes even more important, that sort of 46-ish area, because we've got this prior lows already been tested. It's reacted off that. If we can break it this time, well, then it gives us another higher low. So we'll have a couple of higher lows there, and it would suggest further upside here, a bit more continuation. Ethereum, similar sort of picture again, looking. Well, it's got a couple of other resistance levels coming in above it, but it's a strong, solid day yesterday, and again, really looking to see if it breaks that 32.88 level. Ripple, no difference. In fact, most of these markets, as you run through, you'll see a similar picture. Cardano is just lagging a little bit more, but when it goes, it might get a bit more kicker. But Litecoin, Solana, all very, very similar. Binance, as I say, they're all got the potential. In fact, FTM is just that little bit of a laggard at the moment, which was previously positive. Going back to Binance, so this is quite a key point here. Yesterday, it managed to close well above its trend line, so it's breaking its trend. If it can put a higher low in as well, it becomes, as I say, more positive and bullish. Right, let's have a look at the indices. The Asian markets first. Well, positivity. It's actually an update in terms of it gapped up, came off from its close, open, beg your pardon, but still effectively a bit of an update here. But the bigger picture for the CSI doesn't change. It's still quite bearish. Nikkei, again, bit of risk coming back into the markets and a bit more positivity overall. for this to become more bullish and change my sort of view on it, it'd need to be passing that sort of 28 area, or just short of 28 there, 27.90, 900. Needs to break that sort of area, and it gives us a higher low, gives us a bit more scope for more upside. But equity markets at the moment, I'm still sitting there relatively bearish in. Quick look at the Nifty 50 as we're running around Asia, and well, running into the daily 21 and just reacting not too much for a morning or day of it so far. As we move towards afternoon, it's well, slow, not a massive amount of belief. Looking at the, I'll go for the US markets first quickly. I'm not going to get the FTSE, it's not open yet. S&Ps, again, solid day yesterday. Whether we see that continue through today with a belief in anything, we'll have to wait and see. But overall, I remain more on the bearish side than the bullish side on these. They might all of a sudden change and give us something that looks a little bit more upside, but I'm really looking for a break of this, like the Dow Jones, or these lows here. But at the moment, with the, as I say, risk coming on, we'll possibly see some further upside. Looking at the European markets, well, I can look at yesterday's FTSE there, positive day there, regained much of its Monday's losses, back up to that sort of key resistance, previous key resistance point around the 76 area. Again, we could, the way these other markets are just pitching up, we could see a push back up on that. Bit of a bounce. I'm just looking at a DAX here. It's sort of the bounce. Again, overall, I'm quite bearish on it, but for now, it's sort of picking up, looking like it's maybe got more in the tank. But on all of these, really, I'm looking for the break of the downside there to trade the downside. Not really looking to pitch on the upside. However, we could see quite a significant move if something significant comes from the talks with Ukraine and Russia. Okay, that's pretty much it for me. Nothing else there. Oh, bond market. Someone said, is it time to buy bonds? Not really, because they're being sold, is the answer. The yields are increasing. When the yields are increasing, that suggests that the bonds themselves are being sold, so the value of the bond, or the interest value, effectively the yield, increases as they're being sold. So it's not a time to be buying them. The worst thing for bonds is inflation. So the more inflation you get in there, bearing in mind these bonds would have been sold with very low yields initially, and the more it yeah, so say more selling you get, the higher the yields happen. But it's certainly not a time to be buying bonds at the moment. Okay, that's it for me. Have a great day. Bye for now. Morning to those that just joined us.